Welcome to a brief education piece from the Rebuild Paradise Foundation as part of our Homeowners Insurance Availability Project. This project began as a direct ask of the town of Paradise. Resident after resident asking, "Can I get insurance on the Ridge?" Rumors were spreading about cost and availability, and no one had definitive answers or understanding. In line with Rebuild Paradise Foundation's mission, which is to support the long-term rebuild efforts of Butte County's disaster-affected residents, businesses, and workforce, this project holds great importance. The recovery of our community relies heavily on many things, insurance options and affordability being a major player. As part of our insurance availability project, we've identified 3 project phases. First is Phase 1, and that's what you are seeing, hearing, and downloading today. Phase 1 is providing basic insurance education and then current availability for both stick-built, manufactured homes and then eventually businesses. Further into this presentation, we will look at an actual list of agents and brokers writing new policies in our area. These are also available for download and print on our website, rebuildparadise.org, under the Resources tab. Phase 2 involves digging deeper into the fire risk modeling, or how a community is deemed desirable to insure. How can we attract more insurers to the market? Phase 2 is already underway. Phase 3 of the insurance project is sharing what we are learning with other wildland-urban interface communities. Much of California is experiencing the same insurance struggles. So how can we pass on what we've learned and what we've done to change to others? Before discussing what is currently available and what those options look like, I think it's important to understand how insurance carriers decide if they will insure your home or not. When we began this project, I thought insurance availability for the Ridge would be a very black and white answer. A yes, we will insure, or no, we won't type answer. Well, it isn't that simple. In fact, it's very, very address specific. And I don't mean down to each town, neighborhood, or street. I mean to the exact number of your home address. In order to better understand the complexity, we have to dig a little deeper into the insurance world. In doing so, there are 2 terms that are very important, and those are wildfire risk scoring and protection class. Step 1. You've picked up a phone and you've called an insurance agent or broker. The first thing that insurance carrier will do is ask for your address. They need your address to assess your wildfire risk score and protection class. In most cases, it's these 2 things that determine what type of policy that insurer can write for you. So what are these mystical terms that bear so much weight? Well, I'm going to break it down a little, and we're going to look a little closer at each of them. A wildfire risk score, also known as a fire line score, is a modeling system developed by either an insurance carrier or a paid third-party service. It assesses risk using scientific data and 3 main factors in relation to the wildfire risk associated with your address. So the 3 main things that are looked at are the fuel around your home, the trees, the brush. The second thing they look at is the slope of your property. Are you near a canyon? Is there just a gentle grade to your yard? A slope usually means that fire can move faster, so the greater slope you have, the greater risk. And the third thing is access to your home. Is it easily accessible? Is there a wide street, or are you on a gravel road at the very end? Is it hard to turn around? Protection class is a fire protection ranking system. How easily defendable is your home? So they're looking at things like the fire departments in your area. Is it staffed full-time? Is it only a volunteer fire department? And then the second thing is the water supply system, the condition of that. How often is it inspected? Are the fire hydrants maintained? And the third thing being fire alarm and communication systems. So the telephones and the alert systems in your area and the quality of those dispatching systems. Protection class is rated on a scale of 1 to 10, 1 being excellent fire protection system is in place and 10 being virtually no systems exist. And some insurers use protection class to help determine whether they will insure your address or not, and others use it only as a means to give you a better premium. I'm going to give you a few broad examples in our area of some protection class ratings, just so you have an idea of how this plays in. Chico tends to have protection class ratings around a 3. Paradise around 2 to 3, which is really good. Magalia is averaging about 4s. Forest Ranch tends to be more like 8 or 9s. Cohasset 8 or 9s, and Sterling City 8 or 9 scores. So back to that first step. You've made the call, your address has been entered into a database, and it's been given a score. We'll say, for example, the Fireline or wildfire risk score of your address is a 5, and the protection class is 3. Now, with that information, the insurance agent is going to discuss your policy options. There are 3 types of policy options with homeowners insurance. The first one is an admitted carrier, which is your very traditional, most desirable type of policy. Those policies are written through a lot of common names that we all recognize: Farmers, AAA, USAA, Allstate, State Farm, etc., etc. There are several of them, and I did put a link in here to the California Department of Insurance's website, where they do have a full list of the admitted carriers in California. The second type of policy is called a non-admitted carrier, or a surplus line carrier. These names you may recognize: Scottsdale, Lloyd's of London, Lexington, etc. And then the third type of policy is, of course, we've all heard now of the California Fair Plan. Here we have the 3 different types of insurance policies and a side-by-side comparison. The admitted carrier is your most desirable. An admitted carrier has been approved by the state's insurance department, and they have to comply with all the state regulations. In the event that this company fails, the state will step in and take necessary action to make a claim payment. And then there is a guarantee that customers have some recourse with the state if your claim is handled improperly. A non-admitted carrier has not been approved by the state's insurance department, but they do good business, otherwise they would not be allowed to practice in our state. They don't have to follow those state regulations, and in case there were an event where they went bankrupt or something, the state cannot step in and pay your claim. They don't have legal authority to do so. Now, the California Department of Insurance is willing to step in if you believe your claim is being mishandled with one of these companies. However, their authority over those companies is somewhat limited. And then the third type of policy, the California Fair Plan. And then I have in parentheses there a wraparound policy. And that is because the California Fair Plan is a named peril policy, meaning that it only covers your structure in the event of a Mother Nature type catastrophe, such as a wildfire. It is available to all California property owners as a policy of last resort. It is not a comprehensive policy, meaning that it doesn't insure you for liability or theft or things like that. So you actually need to pair a California Fair Plan policy with a wraparound policy, meaning that you would now go to an admitted carrier and say, I don't need protection from wildfire, but I do need a second policy that protects my home from things like theft and liability. And then that admitted carrier is going to write you a wraparound policy. So you end up with 2 policies with a California Fair Plan, and those 2 policies combined make a whole comprehensive policy. If you do end up with a California Fair Plan policy, it is really important that you shop around at least once a year, because things change, and it could be that an admitted carrier comes to the market this year that wasn't willing to come to the market last year. So again, this is not an ideal policy for you, but it is there as a backstop available to everyone. So quick recap of the steps we've done so far. Step 1 was we called an insurance agent or broker and we had them run our address, and we were then given policy options based on that wildfire risk scoring and protection class of our address. Step 2 was they talked to you about what they could offer you, whether they could offer you an admitted policy, a non-admitted policy, or you were going to need to have written a California FAIR plan with them. And now we're on to step 3. And step 3 is shop around. You have heard what one agent or broker can offer you from the insurance carrier that they write with. But every insurance carrier is willing to take different risks at different times. For example, if one agent can only write you with the California FAIR plan, that does not mean that another wouldn't insure you with a more traditional admitted policy. It's your duty as a customer to really look at all your options. In this slide, we're going to look at a little additional information about manufactured homes. The information about wildfire scoring and types of insurance policies also applies to manufactured homes, but there are some general notable differences. The first being that the number of admitted policy companies writing for manufactured homes is less than that write for stick-built. And at this time, we don't know of any non-admitted or surplus line carriers that are writing policies for manufactured homes. In the event that you end up with a California FAIR plan policy for your manufactured home, those wraparound policies, there is a limited selection of carriers writing those. And then in the event that you were to have a complete loss of your manufactured home, it's really important that your policy has extended replacement cost coverage rather than actual cash value. I know that might be confusing, so I'm going to explain that a little bit more here. If your manufactured home is a complete loss, you want to make sure that your coverage is so that you can go buy a new manufactured home, not the insurance company looking at the fact that your manufactured home was 10 years old and it's less worth than it was when it was brand new. An actual cash value policy means that they're only going to give you what your 10-year-old manufactured home was worth. So let's say that if you wanted to replace your manufactured home for $180,000, you want to make sure that you have adequate coverage in order to do that, not that your home was 10 years old and you may have purchased it for $180,000, but now it's only worth $120,000. You want to make sure that they're going to give you that $180,000 rather than the $120,000. And then the older your manufactured home is, you will see increased premiums. They really push that those newer manufactured homes are up to the WUI standards and are safer, and so they give you a price break on those premiums, which is nice. So now that we have a few main points understood, you know what wildfire scoring is, and you know what protection class ratings are, and then you know those policy type options, we're going to put all those pieces together and look at a few specific examples of insurance availability costs on the Ridge. For this slide, we had help from one major insurance carrier. Strategically chosen for different topography differences, we had 6 quotes run at these different addresses. The pretend house we are insuring at the different locations is exactly the same house, it's just in different locations. So the home specs we gave the insurance agent are listed down here at the bottom left of the slide. We told them we wanted to insure a brand new build, 1,800 square feet, a 3-bedroom, 2-bath with stucco siding. Of course, it's WUI compliant. It has a composition roof and a 2-car garage. And then the policy allows for a 25% upgrade allowance and then an extended replacement cost of 50%. So assuming all of that criteria, we have 6 different addresses here. We'll go through each of those briefly. Number 1 is on Row Road, which is kind of the southwest end of Paradise. It had a fire line score of a 6 and a protection class of a 2. With this particular company, that meant that it needed to be written with the California Fair Plan and a wraparound policy. So I'm showing it in red. So for both of those policies combined, a California Fair Plan and the wraparound policy, giving you a comprehensive policy altogether, the annual premium was $32.50 with this company. On to example 2. This is on Jensen Court, which is the east side of Paradise and near the canyon. It had a fire line score of a 6 and also a protection class of 2. It also needed to be written with the California Fair Plan and a wraparound policy for this company. And its annual insurance premium was $3,800. Example 3 is in very central Paradise on Woodglen Drive. This company would insure this address. It had a fire line score of a 3 and a protection class of 2. And the annual insurance premium is $13.85. So well below those California Fair Plan prices. And understandably so, you have one policy rather than 2. Number 4 is Woodland Drive, which is the west side of Paradise near the canyon, also with the California Fair Plan with the wraparound. Its fire line score is a 9 and protection class a 9. I don't know if you've ever driven down Woodland Drive, but it is tight. So if you happen to go down, you might see why the protection class is up at a 9, even though it is in Paradise. The annual premium for Woodland Drive was $5,650. Number 5 is Eaglet Way, which is north central Paradise. It had a fire line score of a 2 and a protection class of a 2 and could be written with this company under a standard policy, so a grade premium of $1,550 a year. Number 6 is Andover Drive in Magalia. It has a fire line score of a 4 and a protection class 3. It needed a California Fair Plan with this insurance carrier, and the annual premium is $3,125. On this slide, we have done the exact same thing, but for manufactured homes. In this instance, we have used a different insurance agent for the quotes. Again, we gave the agent the same criteria for each of the quotes, and that information is listed on the bottom left. So for these manufactured homes, all of them exactly the same, we're assuming that if you were to replace this manufactured home, it would cost between $150,000 and $170,000. It's 1,800 square feet. It's a 3-bedroom, 2-bath. It's newer construction, less than a year old. It has a composition roof, and it does include some code upgrades. 10% for code upgrades and extended replacement cost of 25%. So looking at our examples, the first one is on Billy Road, which is right in Central Paradise. This company that gave us quotes didn't look at protection class. They only rated these addresses on a 1 to 100 scale for the wildfire risk scoring. So number 1 has a risk score of an 8, which is very low in that 1 to 100 scale. So it has a standard admitted policy written for it at $668 a year. Number 2 is Honey Run Road down in Butte Creek Canyon. It has a wildfire risk score of only a 12 and could be written, again, a standard admitted policy at $632 a year. Number 3 is Ponderosa Way up in Magalia. It has a wildfire risk score of 35, a little bit higher, but still a standard admitted policy at $652 a year. Number 4 is Glenwood Drive, up quite a bit higher in Magalia. It has a wildfire risk score of an 80, quite a bit higher, but still able to be written with this admitted carrier, and that annual premium is $1,263. Number 5, we went over to Concow, and the wildfire risk score on Camelot Lane in Concow was 10 over there. This policy was written for $543 a year, again, a standard traditional type admitted policy. For Camelot Lane, I had them run this same criteria, but rather than assuming the construction was less than 1 year old, I had them run the same manufactured home at 25 years old. And the 25-year-old manufactured home at that same address on Camelot Lane came in at $887 a year. Just wanting to point that out, showing that the newer manufactured homes do have lower premiums. So this one, for example, about $300 a year difference. Number 6 is over to Circle Lane in kind of lower Paradise, and the wildfire risk score down there is a 20. Still able to be written with a standard traditional admitted carrier at $543 a year. Rebuild Paradise Foundation has worked hard partnering with several local and regional insurance agents and brokers to provide residents that are in the market for homeowners insurance this helpful flyer. This flyer should be used as a starting place, not as an all-inclusive list. As mentioned previously, availability can fluctuate very frequently. Our goal is to update this list quarterly, and of course to see the list grow with options and availability for our area. The blue and green flyer was created specifically for stick-built homes or site-built homes. On the back side of it, you will also find some information about wildfire scoring and protection class. So just briefly going over this flyer, you'll see a list of brokerages and then a list of well-known insurance company names. In both cases, I really recommend that you speak with somebody local. They get what we're going through more so than calling a 1-800 number. So a check mark says that this person or this brokerage or this company has not written off our area. They are still in our market. Again, just selectively writing new policies based on your wildfire risk scoring. The little caution sign means that if they can't write you with a traditional admitted carrier, they can still help you. They can still help you find someone, broker for you. It might be a non-admitted policy or it might be a California Fair Plan with a wraparound, but they can most definitely help you. And then the X is that, nope, they have absolutely written off our area and they cannot do anything for you. And as you will see, I didn't come across a single insurance company or brokerage that said that. Everyone really, really is willing to help. The green and brown flyer that you see here was created specifically for manufactured homes. Again, the backside has general insurance information for you. And then you'll see a couple different icons. The check mark says that selectively, yes, they can help you write a new admitted policy. And then the little pen, and you'll see that over on the right side more. That means that that company doesn't write policies for manufactured homes. But if you go to your local agent, they can broker with other admitted carriers who do write manufactured home policies for you. So don't think that you cannot go to one of those local offices for help. And then again, the caution sign means that even if they can't write an admitted policy for you, they can help you find something. Both of these flyers are available for you to download on rebuildparadise.org. And if you would like to be added to our quarterly email blast for updated insurance flyers, please request so by emailing info@rebuildparadise.org. Here we've included a few tips from insurance professionals. The first is a claims history can actually hurt your chances for getting a new or a renewed policy. So use your homeowner's policy for larger claims, not for a couple $100s in damage. With that in mind, you really might consider bumping up your deductible to, maybe, I'm not going to give you an exact number here, but bump it up a little bit. If you're not going to use it for small, minute things, only larger events, raising that deductible can really decrease your annual premium. And then the second tip is to just really make sure that you have the amount of insurance that you need and adjust it accordingly. Don't need to underinsure your home or overinsure your home. Really visit and talk with your insurance agent and broker at least annually and update that information. If you've done a lot of renovations or you added a bunch of landscaping, well, let's revise that policy every year. But just not paying for something that you don't need or don't have at the time will also help save you money. So our next steps. When you are shopping around for your new homeowner's insurance policy, come prepared with your property-specific information. Know the square footage of your home, what it's made with, what other structures do you have, how much is your non-attached buildings worth, your fencing. And then shop early. Realize that these quotes can take a few days, especially if you're shopping multiple places for people to come back to you. Don't wait till that last minute to try and shop around. And then just shopping numerous carriers. Make sure that you're comfortable with your agent or your broker, that you trust them and their experience. And if you are writing with the California Fair Plan policy, you need to make sure that your agent is experienced in writing those policies, because you need to make sure that your California Fair and your wraparound policy combined give you really comprehensive coverage. And if you make it to one of our events where we're presenting, there's often insurers out in the foyer to meet with you and give you options, which is wonderful. And then we usually have the handouts printed for you. Thank you so much for taking time to watch our video short. We hope you found this information helpful. Please visit our website at rebuildparadise.org or connect with us via Facebook, Instagram, or YouTube for updates and information about other projects. Rebuild Paradise Foundation also sends a monthly newsletter, and if you aren't already subscribed, please email info@rebuildparadise.org to be added.